Good morning, traders. Welcome to the Traders Lab. I am your host, Tom B. Thanks for stopping by today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Can I get an audio and screen check in YouTube and the Bookmap Discord Trader Lab? Discord is good? Okay. Not in YouTube? Okay, good in YouTube and we doing okay in Discord, right? Oh, I'm going to assume the audio is okay in Discord. I'm not seeing anything. I did have someone say it was good, so let's continue. Good morning, everybody. Welcome to Trader Lab. Thanks for stopping by. Apologize for the technical issues that we're having. Um, I'm assuming that we're doing okay. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, and there is no cost to access these resources, including a library of webinars and, of course, the Bookmap Trader Lab community, which is made up of a group of like-minded traders who come together to leverage their collective experience in order to become better. The Trader Lab is about the business of trading. It is based on integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. The idea is to understand how the market works, why it does what it does, and how at times to get in alignment with it. Building out a trade plan that has a statistical edge. That is the Trader Lab. You're all invited to the Trader Lab. If you're visiting in YouTube, there is a link down there which says Bookmap Discord. You do need to confirm your email address so we know you're not a spammer. And then you'll be able to take advantage of all the resources, and there is no cost for this in the Bookmap Discord server. One other thing, if you want to actually try Bookmap, there is a free digital version that you can access, and it even comes with data so you can kind of get your hands on it. And there's another piece. If you are a Bookmap subscriber, even with the free digital version, you would then be able to attend all the subscriber exclusive events, as well as access the Bookmap Academy, which has mentoring, tutoring, if you will, coaching, and general review by experienced traders in order flow, setups, trade management, and other ideas and activities that you might find useful in your development. Again, thanks for visiting Trader Lab. Let's try to get this thing going. I hope you can hear me okay in Discord. Okay, let's take a look. Now, as we know, the market is breaking out in a higher time frame. We have discussed this the past few days, and that sets up some interesting opportunities. Hold on, I do have to change one little setting here so you don't see these lines. We are actually currently sitting in a long, and I will say it's tenuous at best, but that's trading, right? Okay. But let's currently get to the current condition of the market. One moment here. Okay. So the condition of the market is we opened. Now I'm going to show you, here's yesterday's high. This is the naked volume point of control, overnight mid. What is a naked volume point of control? It's yesterday's highest volume. And the auction market theory is very simple. It's shopping. So when you hear these terms, theory and everything, it's really just how the market works, which is trying to figure out what's too high, what's too low, and what's a fair price. Now, there's another idea about a fair price. What happens when a previous fair price becomes unfair? It's kind of like you used to buy your tuna for $1. It was a fair price because it was a retail price. Buyers and sellers agreed. But let's say now the price is $1.50, retail price. And you go back to the store where it was $1 and there aren't any there. And you go back and check the dollar tuna and it doesn't exist. If we come here and you cannot buy it at this previous retail price, the market then can revert and go back to the current retail price. So that's one thing you need to understand. In a higher time frame, it's this price. But I'm going to try to keep this simple for you guys. So as much as trading can be simple, because the hard part with trading is randomness. Not, it doesn't have to be complicated, but it is random. One moment. Okay. So this is the RTH open. Let me just try to open this up for you somewhere. I think it's right here. No, sorry. There it is. Sleep at the switch. Full session VWAP. And we have yesterday's settlement and yesterday's high. So initially, if we get buyers on the open, where we have statistics here, we have yesterday's high, we have the ETH high as possible targets. And then after that, there's no references up here, so it might be 5,800 up in that direction. So the first trades are longs. Then if the longs do not succeed, then the possibility exists to come down here. And you could be doing either trade in the trader lab. It's really subject to trade plan. Both trades would be correct, in my opinion. The higher time frame is up, so the context is up. Now, there's another piece, and I always say this at the top of most of my streams, and that is the market goes up to go down, and the market goes down to go up. So what that means is, if we're in a bullish configuration, you're going to have longs in here from yesterday, right? And you're going to get new buyers today playing the breakout. So that's what we got. So that means we're looking for longs. Now, there's another piece to this. If you get the buyers this morning, early buyers, and we can't just open and drive, in other words, just break out and run and go into a trend configuration, which is a possibility, then the other possibility is the longs from yesterday, and then the early longs this morning can become sellers. In other words, we can rotate and get into the stops under the opening swing low and then go down to potential targets below. So all of these are possibilities. Okay. So let's look. RTH open. So now I'm going to show you the first long. Now, whether it's a long for you or not, that's a whole different conversation. For me, it was a long, so I took a long. So, RTH open, chop. This is the yellow line is a developing volume point of control. Now, this is 2 seconds. So this is not where most traders should be activated. This is where most traders do not have unconscious competence, so they cannot activate here. So this right here is too low. I'm going to label it. And this is a process. I'm process oriented, and I think trading needs to be conditional processes because you have to have a way that does not have too many inputs. In fact, if you have a lot of inputs and time frames, you may not have anchored inputs, so you cannot measure them if they're variable. And it's very important to try to establish something called an edge. Casinos, which is really our business model, if you will, gaming, casinos only play games that have an edge. So this is too low, so it's an anchored input. This is too low. So the possibility is, if we come back to these locations, we might, underline, want to get long for the statistics that are above us. So let's see what it does. This is your variable. Hold on a second here. So it's here to here to here to here. This is a variable high volume node. I'm going to put it in here. And what these represent is the auction, and it's our shortest term way to evaluate what the shoppers, remember the shoppers, think is a fair price. So too low. So here's what you have. Too low, too high, right here, variable high volume node, going to label it. Because what I'm doing early on is I'm looking at the auction and I'm trying to get an alignment for my statistical targets up above it. And there are statistics for all of this, and they are available to all of you in the Bookmap Discord Trader Lab, as well as a library of webinars and 60 PDFs of these trades that you can download. You can look at them and reverse engineer them. So this is too low. So if you cannot execute here, which most can't, or here, which is the first opportunity for a long, so here or here, and you can't get long here, I couldn't. So for me, this was my location, mid and this, VHVN. This is called a VPOC migration trade in alignment with the context, which is up. So long, target, scale. Now, we're over yesterday's high, and it's like, okay, now where? And it's like, I don't know. And we're in 1 minute. So I'm just sitting here. Yeah. This was the previous high, so we touched it for the breakout. Now, I'm going to start taking you into fractals. So let me put this on here. This is a microstructure. This is high volume. Market breaks, so this now becomes resistance, and it's right here. Now, I don't know at the time. Wish I knew something. I don't know. And my target, so you know, is up around here. You see this liquidity in the book. It's around 5,800. I'm just going to make a little note about this. So it's up here. So I'm just going to label it and call it liquidity, because that was my target. Still is if we come up here. So now this is too high. No way to know. Now, what I want to see happen in this. Now, first of all, we come back to mid in the VWAP. This is still okay because we might get mid buyers here. And if the markets are going to continue higher, right? This is your retail price. Now the VPOC shifts up. Everything right here is telling me we're going higher. So I am okay with the long at this point. This becomes a problem. Now, right here, everything is going up. Now, we break low. I come back to mid. I know this is too low. I'm now below this. Now I have two choices here. Let's come back to the idea. Trend is up. VPOC migration, saying going up. VPOC migration, looking for extension up. towards the target, which was up here. We come under. Now, as soon as we come under, it sets up a couple possibilities. And let me tell you what they are. Number one, mean reversion. That means come back here. This is the mean. So what was happening here is directional, counter rotation, directional, and then you're looking for this. Remember, the reason these are longs is because of this. Bang, test, mid, resistance, VPOC migration. Everything says up. Here is resistance. Now, sellers were here. You could see them there. That's the delta. And it's not illogical that if you take the previous high out for the whole move, this is the all-time high, that we might take it out, right? So, but that's why you get profit taking. So it's still a long, and here going up, right? What happens here? Now, first of all, I've got resistance sitting over here, right? Also, I have this absorption. Now, there's no way to know until this. When I come down here, this is where the sellers were absorbed. Look at the, so you can see what it looks like. In order flow, this is what absorption looks like. And what's happening is you have market orders coming out, which are sell stops and maybe shorts. And if we get above these sellers, that means there was buyers in here. Now, it's easy in hindsight, but we had buy iceberg going off here, and we have sell stops. Now, I get a lot of questions about the stop and iceberg detector. Let me just give you a little something here. We're coming down. There's 42 stops coming out here. As I'm coming down, now I got some buyers here, so this is absorption. I have sellers here and buyers here. They were absorbed right above this consolidation, or sellers. Why is the market not going up when you see the buy delta? It's because the sellers are over here. I break, I come back, I don't get above these sellers. I come back here, I'm back at the mid. What do I have? Seller. We break high. Now, what does that tell me? They were absorbed. What happened down here? They were absorbed. So absorption. Now, the buyers that were here, there's the iceberg. Just have to show you this. I make a new low. I only have 17 sell stops coming out, and until I see the reversal, I do not know. But what I know is there were buyers here. The buyers are still here. They're just a couple ticks lower. So when I see the buyer, then I know this is now resistance. VPOC migration. Pull back. This now becomes mean reversion, which means long to here. Resistance is here. So I was taking these longs, and I was getting my scales, all fine. And then we get this thing. When I break here, this is support. Watch. You see where it comes. This is now support. And here's the thing. For this, and it's right here. Actually, this should be a little bit. Should be here. The market is really trying to figure out what it's going to do here. We're on the edge. I'll get into that. So this is support right here. Absorption here. Buyers back to VWAP. We need to come back here and take this out. So what happens? We break. So now it's like, okay, that takes care of the ideas on the longs for the moment. Now, Now, let me get in here. Hold on, guys. I think I'm missing something here. No, I'm not. Oh, okay. I know what it is. This is the full session VWAP, and it was not over here. There was a long someplace that I took, and I can't remember where it is, so I can't tell you about it. And I did post it in the Trader Lab because the full session VWAP is still moving around. And at the time, there was a VWAP trade, which got a scale and then it failed. So we come out here. This is now our low. This is a developing first hour low. So this is the current low. So, and I can't remember if the VWAP was here. I don't remember. Does somebody know if the full session VWAP was down around this location? It was, Marty? Is that correct? Was this where the full session VWAP was? Down at this low? Marty, is that correct? Yes. Okay. All right. I took this long. And the goal is to get now the long scale because you might get sellers at VWAP and then going for this mean reversion. There. So I took a long here to there, to there, to there. And then this is resistance, 97-ish. Let's see it. Resistance. So trade worked somewhat, actually was a good trade. It just only got so far, right? And this is resistance. Now, what do we notice about the VPOC? Let's start marking. Variable high volume node. So I need to get over that 97 for the long. And all this is posted in Trader Lab. Now, nobody knows what's going to happen. One thing about trading that you will figure out at some point is nobody can predict anything. We are in an uncertain environment. Now, we come outside. Remember, this is too high. So variable high volume node. I get VPOC migration down. Not good for the longs. This is now our variable high volume node. It's equal to this one. So this was too low. This is too high. Going into a fractal, that is too high. So resistance here, fallout, too high. You'll notice where we come, right here. Now, what I did here is I got short because I had failed. And what changed it was once I couldn't get here, I knew that there was a problem. Once I fell outside, I had basically what had happened is there was 3 distributions at the time. This is a distribution, in other words, a consolidation. The high volume is there. In other words, retail price. That's too high. That's too low. Retail. If I fall out of this, then it's rejecting this at the moment. And I always have to say at the moment because we don't know. When this shifts down, it's also saying we tested this price here and here, and it's too high. Now we're changing our valuation to there, there, and there. So this is now retail. If I break below this and come back here and cannot regain this, then south. So I got short here. And it opens up targets here. And, well, this is the primary target right here of the shorts. And for me, I didn't get short until now. Here, I think it was here, I got long. Yes. So once I got short, I took a target here and reversed it. Now, there's another piece here. I have to I'm jumping around a little bit here on you. I don't mean to do that. We have something called the IB. The IB is set at 9:30. The IB is the first hour's low. Considering we failed here, it sets up that there's a high probability we're going to take this out. One of them out. And since we're down on the low end of the spectrum and the VPOC is moving down, it sets this up. there's over 90% probability we'll take out either the first hour's high or low. Okay, so I'm aiming for this, and this is the target. And I just put an order in. Now I'm still bullish overall in the higher time frame, which doesn't mean anything. It's just this is my trade plan. And the thing about a trade plan is it's not rigidity, it's possibilities and then adjustment. So this was a target. There's also another trade here, and it's a long. So what I did here is I exited here, and as soon when I came above this, I took a long back to here. It's called mean reversion. There, scaled. Now I have resistance coming up. So now I need to get above this to come out to the other side. So this is a long, this is the scale. So I got the short. So the long scaled, failed, so scratch. Then the full session VWAP back, scaled, and then the runner taken out. So did okay on that one. Burgers, fries, and a bucket of chicken. Then the short to the target, fine. Then the long to the target, holding the runner, fine. Now I'm going to take you down into the subcontinent here. I'm going to take you down into microstructure again to show you some other ideas. And today's just sort of a at least for me. I mean, it's just not a great day in the sense of the trade is going okay. It's just that, it isn't up to me. So I think it was here, 87. This is support. Let's talk about why. Sellers are here. Buyers are here. Sellers are still in control. Buyers absorb here. Sellers are here. We get below them. This is resistance. Sellers are here. We see the icebergs going off. I have a seller here. I get my buyer here. These guys are absorbed. This is where the buyers failed. I need to clear this seller and this seller for a long. So right here, I'm looking at a long. I come down again. Sellers are here. Now remember and I've been repeating this a lot in the stream, and I want to do it always, is to remind you that the fact that this is a low does not mean the market won't come down and check it. And the buyers that absorbed this seller may still perceive it as a deal. Oh, really? You're putting it back on sale, and they buy it. So I can't trigger until I get above this seller and back above this seller. So this is the trigger. So this becomes a long, and it's mean reversion. So I'm showing you another long. Right back to there. So what you're seeing is I'm doing a process. This is the trade that was out here. This one, I mean, to there. This is the same trade. To there. Okay, so those are the trades I've been taking. And looking for it not to come below here, which it did. So that's been my day. So it hasn't been a complete, non-event. There's been a fair amount of trades, but we're in two-sided trade. So now, right now, we have another trade developing here. And there's two possibilities here. One is a short from here, and the other one is if we clear this, it's mean reversion and we come back here, and we might take out the high of the day or not. At the moment, we are under this. So this is a very key level. If we can't get back above here, right here, then the possibility is to come there. So there's two possible trades here. A short protecting above here. So we have to watch this very carefully. So this is our microstructure. This is too high up here. This is a potential short fermenting over here. It's not a trade recommendation. The low volume node or outside edge of this distribution is right around the IB low. So it's a location for a continuation trade up in here. It's not a recommendation. The target is here. So it's about an 8-point trade if you take this. Not a recommendation, but your risk is out to here. So we'll see it. We'll see what it does. Microstructure, too high, short, which is not in my thing. I would be on the long, which I was up until streaming, and now no trade for me because I cannot walk and chew gum. I don't multitask well. I can narrate for you guys, but I don't trade while narrating if I can help it. Sometimes I can't help it. Typically what I do is I have a position on, I'll manage it while I'm streaming, but I don't initiate. It's in the rules. So we're watching this, and we know about this. So this is a potential short, and we are going for there. Okay? And why would we go for this? Let me give you an idea. If this is the retail price from yesterday, and we checked it, and then we came back to the retail price of today, and it's too high at the moment, stressing that, and I come below it again, and I rotate up and check the area, and I'm below the initial balance low, then the next high volume location is down here. That sets up the short. It's not a trade recommendation, but if you think of it logically, in the intermediate time frame, this is the fair price. So in yesterday's RTH, this was the fair price. But if I go up in time frame, we can come back here. So that's kind of what you got here. So the locations for a trade are here and up in here for shorts. This is the outside edge, 38 here, of a distribution. The market tends to rotate around distributions, and outside edges are typically where there are stops. So, and they're called low, and that's a low volume node. So it's in this area. So if we rotate up, we can come up into here, and there's going to be stops here. So there's two trades here. There's this, and then there's another one, another short up in here. Two possibilities. So short from here or short from here, and the target is the microcomposite volume point of control down below. So let's see how that plays. Now for me, it was longs, longs, longs. But since I'm seeing the selling and we ran out of buyers, then you just have to align with it. And then anything can happen. So right now, theoretically, a short going for this. And there could be more down here if we get below this, but take it one piece at a time. You guys have questions? Hope you're doing okay. Light is asking me, why do I choose certain HVNs in microstructure? Well, I choose the HVNs where I see a trigger and a change in behavior. So this is an HVN down here, but this is my resistance and it's this high volume right in here. So this is a low volume node. So if I come up here, I already know I have a short here. And since I'm below this, it sets up this. So it's just got to try to get in alignment with it. For me, the long was valid because the naked volume point, wherever it is, I think it was here. Yeah, back to here. This is an okay trade for me. This is legit, and because it's high volume to high volume, mean reversion. So I was reverting from that back to this at the time. So I'm good with that. That's an okay trade. And if we crossed over, then we could have taken out the high of the day, possibly. And then nobody knows. So now let's get back to microstructure. This is too high. So let's talk fractals for a moment. This is the developing volume point of control, which really what it measures is the highest volume for the developing day, for the whole day so far. Inside of this is the same behavior in a fractal. This is the high volume in here. There's a trigger. There's a pullback. And that right there, my friends, is either a short or an exit, which would be in here by the time you recognize what's going on. If you're along, And for me, well, it's a different animal. This is a potential short. So the short is actually here, and we have another one here. So all these are shorts with that as a target. So in the Trader Lab, what we talk about is a minimum 2-lot configuration. The first one's to get risk neutral. The second one, and this is just minimum. You can obviously trade more than that, but you need to know what does it take. The job of the first contract is to buy your stop on your runner. So the worst that happens is you scratch the trade. So this trade would fail. There's two places for this trade to fail. Out in here, which is where I'd be selling it if it comes up there, or we're actually out here. So you have choices. If you sold it here, you would be getting risk neutral. You could have your stop up here. If it squeezes up into here, and this is subject to trade plan, subject to where it comes, you could put the trade back out again and you're still going for this. But you'd be scaling ahead of this low of the day. So let's see what it does. Let's put some shape to this thing. So what happened here? Absorption. What happened here? Same buyers, absorption. So what's over here? Micro high volume. We're going to mark it. And this is your resistance. And remember, this is our resistance. It's out here. So we'll see what it does. And remember, any rotation is random. Market could do anything. Part of the thrill. This is too high in the microstructure. It's right here. So, and here's what we know about this. If we come back here, we can rotate up into the stops that are sitting in here. So that would be another opportunity for me to observe a potential short. I know this is too high. So it is micro resistance. Micro. And when I think of micro, I'm thinking of something like tissue paper. The stronger, the higher the time frame, if you will, or the more volume, the stronger it is. This is not strong. This is weak. But I can reference it because I can see where the buyers were absorbed by the sellers and the sellers took over. Then we had the sellers absorbed by the buyers and the buyers took over. So this right here is a swing and there's stops here. So remember what the other location is. It's out here. Let's see what it does. So this is resistance, and it's not a recommendation. We're looking here to see where the sellers take over. Buyers are still in control. You can see them. They're making progress. We have some icebergs now on the other side, and this is our outside edge. So let's watch. And these are not trade recommendations. I use the microstructure in alignment with locations for potential triggers. So right here we have absorption. Let's watch right here. So we got to watch right here. You got your seller here, they were absorbed. You got your buyers here, they were absorbed. Which side? Sellers are here, buyers are here. Let's watch it. So this is a potential short. It's not a recommendation. We had the sellers here. We have the buyers here. We can get below this, then it sets up potentially the rotation down. You can see it, can't you? Here's the location, and here, this is our outside location. This is called the IB continuation trade. Now, the fact is, it was also a short there. It's also a short against this. All these are short opportunities if it's in your plan. Now, where did the buyers come in? Here, and there's also buyers there. So potentially, you'll see what happened here. We had sellers here and the buyers took over. So right here in this area is support. So if one took a long here, a short, then this is your support area. So you'd be looking to scale ahead of this and then holding for the target potentially below. And again, I don't call trades because I take stops, and you don't want to take my stop. You can take your own. This is a trade I would take. And all it means is, and my job is to get risk neutral. This is how I live and die. Get the risk off. Why? Because I want to try to reduce my losses. How do I reduce my losses? Well, if I can get risk neutral and then I get taken out, it's basically I'm trying to get as close to a free look, if you will, as I can. So I wait for the locations, and I understand there's no precision. I know, remember, the sellers were here. What happens up here? Those sellers at the time came back right here. And that gives me this. Now, what I need, of course, is to get below these buyers. So that's why my scale is ahead of this. And if it doesn't work, I just take a full stop. It's what it is. But if my entry is up in here, and my stop is up here, I've got very tight stops. So if I don't get risk neutral, I'll take a stop, and then I'll look again to put the trade back out at a different location. And I'm not saying anybody should do this. I'm saying this is what I do because I know there's stops here. So I know if I take this trade, notice where we come back. We come back to where the buyers were absorbed. So sellers are here, passive. Aggressors are here. Selling icebergs are over here. You can see them with the stop and iceberg detector. Micro high volume structure is here and here, which is my areas to short. If I can get below here, then I go to my scale. The buyers were here. Iceberg sold into this buyer. The buyers were absorbed here. The buyers are absorbed there. This is my location for a short. If I'm taking the retracements, this is a structured trade in the Trader Lab, and we're trying to get. Does this make sense? Can you see the logic? So we're going to scale ahead of this, ahead of it. And all I'm trying to do is get from here to here for a scale. This is a trade, if you will, in the Trader Lab, if it's part of your plan. Now, scaled, right? Then what? This needs to get cleared to get to the target down here. And remember, let's come back to what happened. Now I'm in fractals, guys, which means micro. The buyers were here and they absorbed the seller. This is why it's a scale. And you'll notice the line there. It's micro, high volume, right in here. This is where the buyers were here, the buyers were here. If I get short here, the sellers were here, the buyers were here. If I take a short, I'm going to scale here. Then I'm holding, and we'll see what happens. Can you guys see the logic? And the thing about what we do in Trader Lab is we operate in something called fractals. And it's not time frame dependent, it is behavioral dependent. In other words, order flow based. So if I know that there's sellers here, and why didn't the market go up? Because there's a passive seller. If the market comes back to it, is it possible if I have a location mapped out and I see my buyer and I see my icebergs and now I see my sellers below the buyer and I mark it because that's where the micro high volume is, and I come back, it's a short here to here. Now if this was 8 points, it's the same trade. The range is determined by the rotation. The behavior is generic. So we take the same trades in Trader Lab. If they're 20-point rotations, we're in them. If they're 4-point rotations and they fit our trade plan, we are in them. The auction is generic. Think about how a Russian doll works. They're inside of each other, Matryoshka dolls. This is a Matryoshka doll inside of a higher time frame, the bigger Matryoshka doll, where we're trying to go here. But in between, support resistance. So if I think the trend is down, which for so far, doesn't mean it won't change, then I'm only on the short side at the moment because I have a target and I'm below this and below this. So this keeps me short. If I come back inside here, other than a test, and I cross above, then I have the possibility of testing higher back here, and then maybe out the top. So I have not given up on the long side, but not at this time. And it doesn't matter, the fact I haven't given up has nothing to do with what I do. It just means I'm aware of the possibilities. But we have longs in the market, and it looks like the longs took a shot. So we had early longs. Those longs got taken out. We got new sellers. Then we rotated back up. The sellers got squeezed. Then the longs who rotated it up failed, and now we're back on the shorts. That's kind of what it is. So it's kind of what you're trying to do in this, at least for me, is not to predict what it'll do, but just to know what it might do and then get in alignment as it develops, because the market is the price of anything. Notice what we did here. Where was the absorption? It was here. This is also another location for scaling ahead of this. For me, this. So it was either here or here. So there. Now, if I come all the way across, I can take this out and come back above here. What I need to do now is clear this to get to this. That's what I know. I cannot predict what the market will do. The magic 8-ball usually says, ask again. You guys ever use a magic 8-ball for trading? We had one on the trade desk. And sometimes it worked better than some of the other stuff, right? Too low absorption. So when I'm looking at order flow, I know this is too high and I know this was too low. So if I'm trading this rotation, I know I could sell this, and I have this where the sellers, I should say, were absorbed by the buyers, and I have this. So for me, the conservative trade is scale here. And then the stop is over this. And I anticipate getting taken out, and that's okay. Why? Because there's stops here, and we didn't get below this. So the shorts then potentially are going to cover. And the closest location for stops is here and here, and above here and above here. So if I come across, if I do, that'll take me out here, and then I will sell it again if I get a trigger for the same trade from a different location. Just saying. And these aren't recommendations, but this is trade plan specific. Do you know what you'll do before it happens? Not because you can't predict what will happen, but you need to know what you'll do, or else you're just making it up as you go, and that's just gambling. So a trade plan is structurally specific, conditionally, a conditional process, which goes something like, if this, then that, if not, then what? If we come down here and I get along, so if this, then back to here, then that. If I don't get above it, so if I don't get above it, so if this does not happen, then, and I hit this and I break low, then that. If that happens, then what? Then down. You see, because it's changed. Now I'm in a mode of shorts only, taking structured trades that get me aligned. I can get stopped out here, which would put me on another short unless I come back above here. And now I'm going for this. This is what the Trader Lab is about. It's about trade plans and accepting. The word I like to use is clueless, not ignorant, but the idea is casinos operate in a random environment. They're clueless. Why is a casino clueless? Because the cards coming out of the deck are random, and how gamblers play the cards is random. So anytime you put a trade on, you are also clueless because it's an uncertain outcome and it's random, just like the casinos. But what do the casinos do that gets them so successful that most retail traders won't do, can't do? They only play games that have an edge, and they play them exactly the same way. And over time, even though the gamblers walk out with cash, and of course we know that, and we take losses, we know that, the casinos are not trying to be right. They're trying to play a game that favors them over the gamblers, even though the gamblers do walk out with cash, overhead, and cost of production. We're in the same business. So instead of trying to predict what the market's going to do, which of course sometimes you can and sometimes you can't, that's part of the random distribution of guessing. Anybody can guess and have a winning trade. If you just make up trades, which is what most retail traders do, some win, some lose. But over time, if the casinos made up games, even though they'd win some hands, would they still be in business or would they go out of business? Well, you can answer the question. For me, I don't want to play that way. I don't want to be the gambler. I want to sit with the house. Remember, too low, back here, absorption. So the buyers are coming for it here. This indicates to me, and I don't use the word indicate because I don't use indicators, that the squeeze-orama is potentially on now because the buyers are more aggressive. Let's see what happens. Is this a reason to close the trade? I'm asking, I'm not answering. Is this a reason to close the trade for a potential squeeze? I want you to answer, not me. And then to look to put it back out again, because now these shorts with these stops are vulnerable. Let's see what it does. What do you guys think? Do you see why, if you understand order flow, if you understand what was this says, why you might exit the trade here and not wait for your stop to get taken? I'm just mentioning it. Now, this is not, it's not a recommendation. This is more advanced because I'm using order flow. You don't have to use order flow at this point, but you want to understand it. And then you have to derive a plan to operate in this. Notice where we are. The sellers are getting more aggressive here at the moment. The buyers are more aggressive here. And where's the stops? Let's see what it does. It's very interesting. These are the things as a trader you ponder. And the other part of it is, how do you know the right answer? Is it the right answer just for now? Or is there an answer that applies to all of this all the time? What is the right answer? Let's accept for a moment, I'm going to ask you to do this, be generous, that we're in a completely uncertain environment, random. We have no control over anything, really. The only thing we control is ourselves, which is based on a structured trade plan, which actually tells us what to do. And our goal, because it's based on statistics, not random rotations, tells us what our job is. Because we know over a large sample size that this trade fails up here. So you have the choices. If you're risk neutral, your stop will stay here, and this was your entry. Or this was your entry. Same trade. Say entry, support, resistance. But what do we know? Absorption, stops. So if you had a more advanced trade plan, you might be using this to exit. But how do you know this isn't just a rotation back here and we're going to find the sellers who are selling here again? We don't know the answer to that. So the answer lies in statistics. And maybe this is too random for you to get a statistic. So maybe it's not part of your plan. But I want you to observe order flow so you can think about order flow and why it gives you potentially an edge over other traders who are just using indicators. Can you sell this and scale here with an indicator? Can you understand what happened here and why you might cover your short, or you let it fail and take your stop? Either one is appropriate if you have an edge. See, that's the beauty of trading. You can slice and dice it up into your music, your language. Auction market theory and using a volume profile as a chassis, and that's what I think of this as. It just shows me where the buyers and sellers participate. It's not a complicated thing. It looks like you landed on Mars, but it's really not a complicated concept. If you go shopping, you go to the store, this is shopping. This is what trading is really being a good shopper. What do we know? If we come outside and the retail price is down here where the volume is, and we find too high, because if retail, let's say this is your $1 can of tuna, and tuna is $1.50 out here, you'll still get buyers, but you'll have less. And at some point, if we run out of our buyers and the sellers go, gee, that's a great price, I'm going to sell it to you, then we rotate back. That is called mean reversion, outside in this fractal, and then back here. So it creates rotational trading. So if you think the trend might be down at the moment in this time frame, then you're looking to sell outside back here, out the bottom, come into here. That's the trade. The sellers are active here and the stops are here. So you got to keep that in mind. The buyers are active here and here. You got to keep that in mind. You see, it's like we're wedged in between support and resistance. So what do? You exit here if you're using the order flow, or you take your stop here on a trailing stop. Either one, in my book, would be correct as long as it's vetted, which means you know this over time gives you an edge to exit. Not this time specifically, but over time. So you have those choices, resistance, support. Now it has to resolve. Target is here if it comes out the bottom. Is everybody tracking? Is this making sense? Hope it does. So let's watch. We have support here and here. Let's watch it. So you got resistance there, which was the short. The scale was here. This is support. This is support. This is support. This is resistance, resistance. This is the fractals. So what I do, and what many traders do in Trader Lab, and there's not one way to trade, by the way. It's just I don't use indicators because I'm not interested in being late. I want to be here now. So if I can execute here with a stop here over time, that gives me an edge over other traders, doesn't it? So what we know is the buyers are here and the sellers are here. Would that help you to know that? Would it help you to know that the trade fails up here? And we might get our buyers still over here. And just to add, see, what I'm doing is I'm operating in what you guys think is a multiple time frame. This is the target. Now the buyers, remember, the buyers are here. So if I'm short, I have to get through this. To go here, which is the target. So we'll see how it plays. But the important thing, if you're interested in what we do in Trader Lab, is to understand what's going on right here. Other than, oh, it's chop. It's rotations. And it's a consolidation. We're coming out the bottom. So that puts this on track. And there's also a possibility of getting there too. But and here. So we have this as a next target. If we get under here, then we have this level, this level, this level. I wouldn't hold my breath for them, but that doesn't matter. I can't predict anything, as you could probably tell. But I do know resistance and I know support. That's what I know. If I'm now getting out under support and I don't know, my buyers were here, here, and now we want this to continue down. If I get my buyers again here and I come back above, and this is absorption, I can come back here and still squeeze. So let's watch it. I primarily work with levels, so targets. So it's just levels, you see. This is interesting, isn't it? If you know this was absorption and we come down, the buyers that were here are still here. So we'll see what it does. So how do you trade this, right? Well, short to there, that much I can tell you. What about now? I think the short is over for now, but it could have been over here too, you see? So where's my stops? They're sitting in the same place. So the conversation is the same one we've been having. So what do I know? I know that's a short. I know that's a scale. I know the buyers are still here now. And I know every time I come down and I don't fall out, that the potential for a squeeze is increasing and my stops are above here. I know if I come out above here, I'm looking for another short. That's already my plan. Not a good one, just one. And that can change in a minute. I'm not rigid. I am navigating this consolidation and I'm looking for the next target. And if I can't get under here, every time I'm not getting traction here, it's setting up the more potential for a squeeze. So I just have to be patient. My stop can be fixed over here. There's no risk on the short, or I could be trying to manage it with order flow. Micro high volume is right here. Let me show it to you. I got it here. So too high, trigger, short, support, retracement, retracement, resistance. What's in here? This is the current, this is current. I'm going to put a little box around it. So what I'm doing is I am tracking the consolidations because they're the auctions. In this auction right here is the high volume. It's there. When I break down, and now I have absorption, and I come back to this volume in this consolidation, which you can see here. This is an auction. I'm not paying that. It's too low here. When I break and the sellers take control, I come back there to this high volume, this, and it's another short sequence. These are micro structures. What happened here? Volume here, break, come back and check it, short. What happens here? Buyers are here. I come back here and check it, too high. Now I consolidate here, break. What do? Come back and check it, too high. Do you see something familiar? Too high. Consolidation. Chop, chop, micro, break, trigger, test, short, right? Scale. Come back to where? The location. Too high. Stop over there. Who knows? Chop, chop, chop. Consolidation. Micro high volume. Trigger. Come back to where? High volume. Now, it works from both sides, guys. Okay? Where are we trying to go? Here. And maybe down here, but neither here nor there. So this is your little world. This is our little world of fractals. Matryoshka dolls. We're trading inside of dolls, basically. This is the bigger doll. This is the big doll at the moment. And everything that's going on in here are the little ones. That's what's going on. So what we need to do still is get under these buyers. See the icebergs here? Sell stops, absorption, absorption. This trade needs to clear these buyers here. That's it. So it can squeeze, it could do anything. It's just one trade. That is it. So if I'm sitting in this trade, I'm going, well, whatever, because that's it. If you're looking for certainty, this is the wrong business. This is the business of maybe. Maybe it'll go up, maybe it'll go down. Do I have a trade location? Do I have structure on my side? Am I in alignment with the current direction of the market? Can the market take out the high of the day? Yes. Will it? No clue. Does it matter? No. If it is, I'll get turned around long before we get there. At the moment, I only have one direction at the moment, and that is short. If it doesn't get to my target and it takes me out, I'm still going to be playing the shorts unless the condition of the market changes. That's it. And that's just me. But that's understanding the business of trading and that it's a business of alignment and randomness. So everything is good, the longs up to here. Then it all changes. So what do? I just hang out. If I get taken out, I'm going to be looking to sell it again out here. I already know that because of this. The stops are sitting here. If we counter rotate, then we can take this out and come out here. And then if it's only a stop pick, as I call it, or a short squeeze, and we exhaust, and I see absorption and icebergs on the other side of the trade, I'll get short again just do the same trade from another location. Go in there and maybe lower. Any questions? Does it make sense? We are not holding above the naked volume point of control, dyno. It's a piece. But the fact that we see what we did is we tested it and we reverted up. That was the long that I took. When we failed it, then it's telling me it's too high. Now that it's too high, and there's no precision in this, this is the next area. So this is the auction. So the auction is just saying short. And the possibility of it reversing, taking out the high of the day, all of this is all possible. And our job as traders is not to predict anything. It's just to get in alignment and then manage your trade per your plan and just let the chips, as they say, this is a great term from casinos, let the chips fall where they may. Gaming. Guys, it's gaming. Most retail traders think this is a business of being right and a business of prediction. It absolutely is not, in my opinion. I thought it was when I started. We all think the same things. And when I started, we barely had technical indicators. It was 1980. We didn't have an internet. We didn't have personal computers. You wanted to use a computer, you're using a mainframe. That was nice. So if you wanted to do research, you had to do it by hand. And it was beyond burdensome. That's how I started. And when I started, I learned classical bar charting at the Merck. And what's important about that is measured moves. So it was predicting, head and shoulders, flags, pennants, whatever, rectangles, all this stuff. So absorption again here. So anyway, we're going for this. And you would have a trade management process in place. Let's look at it. So we know about our sellers. Here we have our buyers. We break low. We had sellers here. We got our buyers over here. We need to get below this. These buyers are here. If these buyers get above here, then we can counter rotate. Resistance now is here. We can break below these guys, then these guys were absorbed. Right now they were absorbed. What we want to see is, do the sellers come back in here? What was in this microstructure right here? Right in there were the sellers. What is right here? Now I'm going into a shorter term fractal. This right here, you had your sellers, your buyers, your sellers, your buyers. Break low, trigger. Where's the volume? There's the rotation. I need to get below this to go lower, because that's absorption, and absorption's here. So I got sellers here, buyers here. Let's watch. In the last place the sellers were active was here. Order flow. Let's watch. So I got sellers here, buyers here. These sellers were absorbed, okay, because I'm above them. Now I'm looking where the buyers were absorbed, which is here. So this is my first layer of resistance is here. Then the next layer is here. Let's watch it. The buyers are here. See if you could read it with me. And why? You're reading the order flow with me. The buyers are here. The sellers are on the other side. That's why it doesn't go up. The green bubble is an aggressor. The reason the aggressors don't go anywhere, well, icebergs, but the passive side. So this is the limit order book, these guys, but there's also the limit order book, passive sellers. Oh, you're going to pay me this for it? Here, have as many as you want. Sellers. Sellers. Buyers are here. sellers are here. So you can kind of now see support and resistance in a micro, in a fractal. Buyers are here. That's why we didn't go down. Sellers are here. This is why we didn't go up. You've got support and resistance in a micro structure. Now, how do we use it? You can use it for trade management. But as you get down in time frame, if you will, or fractal, it's very easy because these are micro rotations. Notice what happened here. Notice where we went. Why did it do this? If you understand, if you come to Trader Lab, you can learn this. Also, why did it go here? And we see the behavior. Let's answer the question. Why? Sellers are active here. This is our target, by the way. Absorption here. Buyers are here. Are you guys tracking? You getting something out of this? This is Trader Lab. So we're going for this. This is our next target, and I always give it a couple of ticks. And then I got my trade management going. Now there's a couple other ways to do this. This is, again, trade plan specific. You're going for this. There's no precision. When you see the absorption, you have choices. You now are trailing to where the sellers were in control, which is here, or you see the absorption, you have microstructure here, you break high, you exit. It's all up to you. There's no precision in this thing. And by the way, we get under here, out here. Not a recommendation. So this trade, subject to your plan, not mine, can be done here. Or, I'm giving you the ors because it's not up to me. It's up to your plan. Do you have a plan? If you don't, then you don't know what you're going to do. You're going to be making it up. Gamblers make it up. Most retail traders are just making it up. And we know the statistical survivability or for those traders. It's not good. So the buyers were here. The sellers were there. The sellers are still here. The buyers are here. We now have defined support and resistance. Resistance, support. I need to get under these buyers, and they were still in here. How do I know that? Because there's the sellers, there's the absorption, the green box. The sellers come over here. Why didn't we go down? These buyers. Where's my sellers? Here. Micro, high volume, structure, resistance in the micro. So let's watch it together. Let's just see what we can see. Are you guys tracking? Are you getting something from this? If you're in YouTube, please give a thumb up. Also, if you're interested in Trader Lab, there is no cost to become part of the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. There are 60 PDFs of these structured trades that I'm sharing with you. It's basically trades that you can review, look at, reverse engineer, find your groove, where it fits for you. Everybody does their own thing. There's no right way to trade, but I can suggest that if you don't know what you're going to do before you do it, you are making it up as you go. And that means it's very much emotional stimulus. It's generated by fight and flight. We're all wired for that. How do you get control over your emotional state? It's about trade plan. Knowing what you'll do before it happens, not what will happen because we have no idea. Okay, what do we know? Remember, we don't know. Buyers were here. Notice what's happening. This is what we know. We know the sellers are here. So we want to see what happens here. Buyers are taking over. So this trade, if you didn't do anything with it, will get taken out at a scratch if it comes to your stop, or you're just hanging out. Now this is pretty close. This is where some judgment comes in, and you have to decide before the fact. Your stop could be here also. And when it takes this out, you could be out of the trade. Or right here, when you break here and check this node, let me show it to you. All this is up to you. So there's no way to know. Resistance, support, break high, resistance, pullback, support, break high. Trades over here, or you've done nothing and you're just sitting in here and you're going to let yourself get taken out. Does that make sense? We have sellers here. We're coming back out here. This is important, and so is this level. Remember, the trades are out here and possibly in here. We're going to see. We have our resistance here, and we have our absorption here. Notice we had the absorption here and here. This is just the opposite thing here. Now we're coming out to high volume node, and we're just going to watch now. See, the thing with the auction is there's no precision in this. This could be a valid test of this location. There's no way to know until hindsight. You know, there's a lot of traders, who post things, here's why we had the high of the day. Here's why. That doesn't do us any good. Here's why it reversed here. Well, what's your trade plan? How do you manage your trade? When do you execute? Are you trading the news? Or are you just trading in hindsight? What are you doing? If you can't put it down before the fact, it's just noise. Okay, right here, we're watching the absorption. You can see it. I have my buyer here. Remember, my sellers were in control up here. This is a location. So we're just going to observe it. I don't have anything to do. I mean, because this pretty much is it right here. This is the end of the short. Unless your plan says you don't do anything. What gets me to be paying attention to this is that as the target and this absorption. That's what makes this important. You had the same thing here. So I see, and where do you see the absorption? You don't see it until here. Then here you see it again. Then here you see the sellers, and the absorption is here. You see, once we get above these sellers, the buyers are up here, and the last sellers were here. This is where the trade is over, if that's your plan. So let's just take a look at it. Here, now look at the difference in the behavior. Buyers are here. The sellers are here. We test. Remember, my sellers were active up here. Now, I'm not a scalper, so I don't, I just be done with the trade. I don't care about it. But if you're trading this range, and and it's not for me to make recommendations, but I am going to make one. If you're risking 2 points, 3 points to make 2 or 3 points, that doesn't come out. So for me, if I'm getting short, I'm going for something that has some more range because I have to be able to get risk neutral. Does that make sense? And this is something you would craft on your own in the Trader Lab. See the sellers, you see the exhaustion, you have a location. This is scalpy. I don't do this. I just try to get the bigger swings. But you could. Most traders don't trade these short rotations. And here's why. My risk for a 20 or 30 point trade is the same to try to trade because I can't enter here. By the time I get in, I'm getting in maybe here. Where am I going? Here? See, this is my support now. Well, 2 points? No interest. I hope that makes some sense, and I hope you guys are getting something out of this. This is Trader Lab. If you're interested, guys, there's that link in the bottom of YouTube. It says it's a link to the Discord, Bookmap Discord community. There's a lot of additional education. It's all available at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker, behavior options, swing trading, and a lot more. Plus, this week we have a special Pro Trader webinar going on. It's only in Discord, and if you want to attend this, it's open to everybody. There's no cost, and but you do have to verify your email to make sure you're a spammer, not a spammer. Make sure you're a spammer. Make sure you're not a spammer to protect the quality of the participant experience in the Bookmap server. Also, if you use that link, you can access the Bookmap Discord Trader Lab community. And this is what the 60 PDFs of structured trades look like and they have explanations and, actual trades, real trades, and then screenshots. These are from like 2020, 2021, but this is what I share. These are the structured trades, and you can reverse engineer them. And then there's a library of webinars also that you can observe, plus the Trader Lab community. All this is available at no cost. So if you're using order flow, these are tradable, but it has to be your plan. In other words, are you going to trade this to this? That's up to you. Me, not so much. Now, if I get this, which was my short, to this, I'm okay with that. If I break below this and come up here, short, I'm okay with that, right? If I come back here, I'm okay with the short. And I'm trying to remember what the target is down here. It's still this. And if I get under here, I can do some more selling. But that's my primary target. So I'd be okay personally, I'm just telling you personally, since I can't pick the low or the high of anything, to be done with this trade on this reversal and just let it go with that. Please give a thumb up if you're visiting in YouTube. Remember, these streams are available exclusively to Bookmap Discord Trader Lab participants for screenshots, replays, reverse engineer, compared to what you did today, and just see if you're reading the context and the developing behavior, and then go from there. Everything is up to you and your plan. Nobody can give you a trade plan. You have to find what resonates with you. Target. And for me, I'm okay because this is the target. If I get below here, it sets up more downside. Thanks, guys. Thanks for visiting Trader Lab. Hope you got something from today. If you're in YouTube, please give the thumb up. Copy the link. You might be able to watch this if you copy the link and save it, pass it on to your buddies who might appreciate what this is. Maybe they might like to visit Trader Lab. There's no cost. You can use the links in the bottom of YouTube, and also verify your Discord email to get access. Don't forget the special Pro Trader webinars that are going on this week. You still have time. And if you're interested in the free digital version of Bookmap, which comes with data, you can get your hands on that. There's no cost for that one, and it would then make you a Bookmap subscriber. And you'd be able to take advantage of all the special streams. And this is our next target down here after this. Anyway, have a good day, everybody. Just wanted to show you that last little move. And there is no way to predict this. But this is auction market theory using a high tier tool like Bookmap to look inside participant behavior, overlaying it on a volume profile. Thanks again, guys, and have a great day.